So hey everyone, welcome back to my YouTube channel. This is Manisha and in today's video we are going to solve chapter 14 quiz. These all quizzes are from the study hub. So if you are financial accounting student appearing for your financial accounting paper, so this video is going to be useful, right? So let's solve chapter 14 quiz. Okay. Now, first question is Sam has been reading about the purpose and the principles of producing a trial balance. Which of the following statement about the trial balance is not correct? So, Sam is just analyzing the purpose and the principle of trial balance. So, let's read out the one by one option and figure out the which one is correct. But the question is asking which one is not correct. Okay, I mean out of this which one statement is not correct. The first one is saying there is a legal requirement to produce a trial balance. No, there is no any legal requirement to produce the trial balance. So as I have said previously, there are 5 things which comprises the financial statement. Your statement of income, statement of profit or loss, or it is also known as income statement. Then we have a statement of financial position, then a statement of change in equity, statement of cash flow, and disclosure notes or notes, right? These are the 5 statements which are comprises as a financial statement and important, required to produce, but trial balance is not a legally requirement. Okay, so it's a standard simply a standard accounting step to check your debit and credit balance. So that's why it's the incorrect one and we find our right answer. But let's understand why, what other statement is saying. The B, trial balance is extracted from the general ledger. Yes, this is correct, because in trial balance we list out the every ledger, right? What all the ledger account balance are listed in the trial balance at a particular date, so it's correct. Third says the total of debit column should be equal to the total of credit column. You know the double entry accounting system, so according to that system our debit and credit should be equal, right? The key purpose of trial balance is to check whether our debit is equal to credit or not. Okay, so if not, would suggest that there might be some mathematical error. So C is also somehow correct. Now D, trial balance is prepared before financial statement are produced. Yes, the trial balance is usually prepared at the end of our accounting period, but before preparing the financial statement. Again, this is correct. The next question is, Really runs his own business, keeping record of shares and expense only. The total sales invoice for the year were 320,000, on which he made a gross profit of 80,000. Which of the following is correct? Which of the following is cost structure used by Really? So if you look at the option, they have mentioned the word margin and the markup, and I must say you guys know the difference of these two. There is difference. Yes, both are like conceptually it's same, like it's a profit margin, but yes, the calculation part, the both are different, and I have made a separate video on this topic. So if you have not watched it out, go check it out my channel. There is the video. So basically margin is applicable on the selling price and markup is applicable on your cost price. So now we need to check how much is the markup and margin in our case. So gross profit they have given, right? So 80,000 is the profit, and if we divide it by selling price, it will give me margin. As I said, margin is applicable on the selling price. So selling price is 320,000. So that's give me the margin of 25%, which is correct. C, right? So option A is out, but let's confirm for markup as well. For markup, what we need to do, we need to find it out the cost figure. So what is the cost figure? What is the cost of sales? So if 320,000 is the sales and 80,000 is your gross profit margin, that means 240,000 is your cost of sales. Now we will divide 80 we will take 18 divided by 240, so it will give me the markup of 33%, so which is not in our option, so that means C is the correct one. Okay. Next is on 30 June 20x7, a business has a net asset of 74,000 compared to the 62,000 on 1st July 20x6. During the year in 30 June 20x7, the proprietor drew 11,000 out of the business and the business paid his annual subscription to the proprietor Sports Club of 2000. What is the profit made by business for the year ended 30 June 20x7? So for this equation, you need to remember the formula that profit is equal to your closing net asset minus opening net asset plus drawing. That's it. You need to remember the formula: closing net asset minus your opening net asset plus drawing. Okay, so any personal expense, even though paid by the business, it will be considered to be the drawing part, not the business expense. So let's calculate that. So what is the closing inventory in our case? I mean, sorry, closing net asset. So our closing year end is 30 June 20x7. So okay, on 30 June 20x7, which is our year in, net asset value is 74,000. And on 1st July 20x6, which is our opening year date, so opening net asset on that date is 62,000. So we will subtract 62,000. And as I said, we need to add drawing. How much amount is drawn by the proprietor? 11,000. Other one is your 2,000. Why? Because these expenses are the personal expense of the proprietor, not the business expense. Okay. Let me calculate one more time. Sorry. 74,000 minus 64,000. Then we will add 11,000 plus 2,000. What the mistake I am doing? 74 minus 62. It's 12. Oh, 12 plus 11 plus 2. 13 plus 12, it's 25. All right. So 25,000 is the amount of profit made by business for this year end. So next we have which two of the following item will be appear on the trial balance as a debit balance. So this kind of question could be asked and you should be very confident on this topic because it's easy marks. So share capital, it is always on the credit side. Prepayment, yes, it is on the debit side because it's assets. Tax payable against the payables, it's liability which will be on the credit side, and sales return will be on debit. Why? Because if we are making the sales, it is on the credit, but now the customer is returning the goods, so it should be on the debit. Okay, so last question of the today video. A fire on the 30 April 20x3 destroyed some of the company inventory. A count on remaining inventory was carried out. Following information is available. So on first, at the start of the month, 1st April 20x3 inventory was 128,000. Sales during the April was 345,000. Purchase during the year was 25,000. Inventory remaining on 30 April 20x3 is 87,000. So gross profit on sales is 30%. So what is the value of inventory lost? Okay. So basically, the inventory remaining figure at 30 April is 20x3. So now first of all, we need to calculate the closing inventory by using the formula how much it is. So do you guys know the cost of sales formula? It's opening inventory plus purchase minus closing inventory. So we have opening inventory given purchase also given. So two figure is missing. One is the closing inventory and other one is cost of goods sold. So cost of goods sold can be calculated. How? Because they have provided the gross profit of 30%. So that means 70% is your cost of goods sold. So 0.7 into the sales value 345,000. This will give me the cost of sales value of 241,500. So this is the cost of goods sold value. So the formula is cost of goods sold equal to opening inventory plus purchase minus closing inventory. So as we need to find out closing inventory, so let me show you. So this one is the cost of goods sold, right? So we will deduct the opening here. Opening is 128,000 as well as purchase amount 275,000. So I know this will be in the minus because on the other part of the equation there is minus closing inventory. So minus will be cancelled out. So our closing inventory value is 161,500. But according to question it's 87,000. That means what is the value of inventory loss? It's 74,500. Okay. Okay, so we are done with this chapter as well. So stay tuned for the next chapter and then don't forget to subscribe and share my channel.